Gokaldas exports reported a weak set of numbers in their fourth quarter. The profits were down about 3% on a year-on-year basis. The revenue also missed estimates, going down about 11% We have Sivaramkrishnan Ganapathi, who is the Executive Vice Chairman and Managing Director of the company, joins in to detail these numbers for us and, more importantly, give us the outlook for the future as well. Thanks a lot, sir, for joining in. You had given us an annual revenue guidance. For that, you've met those targets that you're given. What do you expect in terms of FY24, and what sort of volume growth are you penciling in? You had given us a range of 2,000 to 2,200 crores on the top line. From an annual perspective, you've met that. What are you targeting next year?
So next year is from a prediction perspective could be challenging. We are of course targeting growth next year, but then it is also dependent heavily on how the US economy and the European economy shape up. We are confident that regardless of all the headwinds, we will still deliver growth. So that goes without saying. But to quantify it will become very difficult given the circumstances, as the full effects of the economic uncertainty is yet to play out. So I will leave it at that, and we'll keep refining our projections for next year as we go along through the year.
So at least some growth, Mr. Ganapathi, is what you're looking for. I don't think that will be such a bad outcome, given the kind of pessimism we are hearing about. So, and hopefully, as we speak every quarter, there could be some kind of positive trigger that comes about. That said, Walmart and other retailers, well, they're looking for new suppliers. Could you be one of them? I mean, any kind of conversations?
We're already supplying to Walmart, so they're already our customer.
Yeah. All right. So that's, maybe you'll get... Maybe you get more business then, in case they are looking at further projection.
So not just them, right? We're working with a whole host of customers. We're working with all the big customers globally. And, we're working with any of them, who is looking for incremental sourcing out of India. And the good news is that all of them are. So there is, incrementally everybody is looking at pushing more and more sourcing out of India, which is good for Indian suppliers. As long as the market conditions improve and their sales pick up, I think we should start seeing stronger growth. In the meanwhile, we will have to deal with some headwinds. Right. But like Walmart, there are many others who are also considering sourcing more and more out of India.
Right. Mr. Ganapathi, just a follow-up on what my colleague Nigel asked you with regards to Walmart. I mean, you are already suppliers to them. What is the kind of inventory that they are sitting on right now as against average? Because I understand that, their inventory levels have also been going down because their ordering had muted over the last couple of quarters. So if that was to come back, you could see incremental growth coming by, right? Could you give us a sense of not just Walmart, but a lot of your large retail customers?
Correct. So many of them have, over the last 6-8 months, have really worked on reducing their inventory. They've been very successful at doing that. So that's happening. We now have to see, how they view the demand going forward. And if they view that the demand going forward is good, then they will start, bulking up on inventory. But at the moment, they are playing it cautious. I think a few months from now, we will have a much better handle over how things are going to shape up. But my sense is that, the inventory story is, nearly reaching the bottom. So things should start looking up going forward.
So if you could quantify that, because you said that, up until the second quarter of this year, you would see single-digit growth. For the entire year, you're looking at some growth. Should we merge the two?
So again, so when I say second quarter, I'm talking of sequential quarter-on-quarter only, I'm saying. So that's how it will be almost like, in my mind, low single digit or single digit is all flat. So we will probably be flattish for the first half of the year. And after that, I'm hoping that in the second half of FY24, we should start seeing growth come back, because by then we will be really catering to spring and summer of 2024 in the Western markets. Hopefully, things will be looking much better by spring and summer of 24. That's a good year away. And my sense is that market should be much, demand situation in the market should be much better by then.
Some feedback that I got and some reports that I was reading, in parts of Tamil Nadu, there have been some shutdowns as well, in Tirupur and all that, So there is some kind of pain that we're seeing as well. But let's focus on the March. You're making a point.
That's
sir. Go
correct.
ahead.
That's correct because, but there is a difference. We are more into wovens, and most of Tirupur is into knits. So the product types are also different. Yeah.
Right.
Oh, that's good then. At least you're guiding for some growth. Let's talk about margins, though. That was a pleasant surprise in the past quarter. Could you tell us what kind of sustainable margin we should be working with for FY24?
So we're always working hard on making sure that we retain our margins. So our hope is to be able to retain our margins at the in FY24 at FY23 levels. Obviously there will be when there is demand headwinds, there will be pricing pressure from the customers, and we will have to try our best to see how we can manage our costs, raw material costs, as well as our cost of operations to hold on to our margins.
So approximately 12%, sir, Mr. Ganapathi, approximately 12%?
I think that should be definitely possible.
Right. You've also, incurred some capex, 150 crore worth capex on a historical asset turn of close to around 3.5-4 times. This should yield 600 crore worth revenues to you. By when does this happen? And
I would reckon that it'll happen from FY25 onwards. That's when we will start seeing some of these the result of all these capexes.
And your contribution from high average price products, that had increased to close to 88%, and this was around 59% in FY19. I presume a lot of that could also be on account of inflation. So if I was to look at a higher average sales price product, say something above 600 as against 450, could you give us a sense of how that portfolio is panning out and how that contribution has changed?
So that's also gone up. We sell a lot of outerwear and products which are high ASP, and that share of those things are all going up. Even in fashion, where we sell higher value products, and that's one of the reasons why our sales is rather driven by high value products rather than simply number of garments.
Okay, all right, Mr. Ganapathi, but we can't let you go at that. Clear Wealth Consultancy Services, that's the promoter entity. They've sold more than half of what they had. They have close to around 11% stake. What's the outlook from here on? Are they going to hold on to that, or do they plan on selling out?
I think they have indicated that they want to hold on to that, and they're very much part and parcel of our strategy, planning, etc. So they're very much involved in the business going forward.
So you think for this year at least they'll hold on that 11% stake?
I think so.
But at some point, given it's a private equity, it will look at selling to a strategic or maybe another financial. Do you think that's in the offing at some point in the future? Just trying to understand their end game.
So it is really their call. So I cannot speak up on their behalf. But having said that, they're very much supportive of the business. They have benefited immensely from investing in this business. So it's really their call. But I guess having benefited from this, they will be supportive of the business.
All right, benefits are until they are encashed. Until then, they are just benefits which are there in the books itself. Thanks a lot, Mr. Ganapathi, for joining in and giving us the outlook. Wish you good luck for FY24.